Welcome, dear traders. You are watching a recap of the Asian session. Sentiment in the Asian trading was impacted by several mixed factors. Japanese and Chinese equities climbed, while Australian and New Zealand ones declined. A drop occurred amid cautious sentiment on Wall Street and the Fed's monetary policy prospects. Last week, Jerome Powell admitted that the regulator might not need sharp rate hikes in the near future. Minneapolis Fed President Neil Kashkari also noted that he could support holding interest rates steady at the central bank's next meeting in June. Earlier, the rhetoric of Fed policymakers, including Powell, was more hawkish. They were in favor of raising the key rate until inflation hits the 2% target. Jerome Powell's speech last Friday did not contain any direct statements about the future plans for rates. However, he stressed that the central bank reached the balance between the risks of a too aggressive tightening and a less aggressive one. Such a change in rhetoric was deemed by traders as a dovish signal. Investors are also concerned about the outcome of talks on the debt ceiling. The latest round took place last weekend. Despite the optimistic comments of President Joe Biden and the top Republicans, the parties failed to reach an agreement. Negotiations hit an impasse when House Speaker Kevin McCarthy left the meeting. Some analysts believe that these talks look more like a rehearsal for future presidential elections. If one party makes concessions, it will mean defeat in the presidential race. In addition, debt ceiling talks have never occurred at near 130% debt to GDP, and this is why the Republicans are holding the line on their requirement for spending cuts. President Biden believes these requests are completely unacceptable. If the parties fail to reach a consensus, the government could default on its debt as early as June 6, if not earlier. Negotiations will resume tonight. However, the expectations have affected trading sentiment in the Asia-Pacific region as well as the currency movements. The US dollar defended the level of 103.20 in the morning. It consolidated in the range of 102.90 and 103.20. It declined sharply on a Friday after Jerome Powell's speech. The US dollar slightly recovered in the Asian session. However, it slid below its multi-week high of 103.60, although inflation still exceeds the 2% target. Hopes for a pause in monetary tightening continue to exert pressure on the US dollar. Traders also took notice of another crucial factor. The Fed has tightened the lending standards due to the banking crisis. This is why US banks limit liquidity injections into the economy. A decrease in the money supply usually leads to an increase in the US dollar. The yen took advantage of the fall in the US currency last Friday. It rose to 137.50. However, it failed to retain momentum. On a Monday, the dollar-yen pair again tested the resistance level of 138. After that, it consolidated in the price corridor of 137.50 and 138. Earlier, the yen advanced amid a fall in the US talks after pausing in negotiations. However, expectations of a new round of talks also limited its upside potential. If the risk appetite keeps declining, the pair may drop lower. It could test the support levels of 137.60 and 137.30 and even 137.00. The resistance level is located at 138.20. However, speculators could increase short positions on the yen in the case of another rally. The Australian dollar is likely to maintain the downward movement. Risk appetite is falling and the oil prices are fluctuating in a wide range. Apart from that, the People's Bank of China kept its interest rate unchanged. The Australian dollar, which serves as a liquid proxy for the yuan, tumbled following that news. The AUD-USD pair reached an intraday low of 0.6629 on a Monday morning. However, the Aussie also rebounded from the low of 0.6607, where it was trading at the end of last week. It climbed slightly to 0.6637, and the resistance level is seen at 0.6680. At the same time, it was moving in the downward range of 0.6628 and 0.6670. For this reason, a decline to the support level looks possible. In any case, the Aussie is likely to be rather volatile today, and the New Zealand dollar has been rising for a while ahead of the Reserve Bank of New Zealand meeting. The Kiwi managed to retain its bullish bias last week, as traders were anticipating another rate hike on Wednesday. Despite the fact that inflation fell to 6.7% in the first quarter of 2023, it's still very far from the 3% target. After a slight decline in the morning, the Kiwi entered again the upward channel of 0.6265 and 0.6294. At the end of the Asian session, the Kiwi dollar pair rose to 0.6284. However, the further movement of the pair will depend entirely on the trajectory of the greenback, so a price reversal in the American session may take place. Today, the main focus will be on the negotiations on the debt ceiling. The economic calendar is uneventful today. However, there will be plenty of crucial economic reports and comments from the policymakers in the coming days. That's all for now. Hit the subscribe button and stay up to date with the latest news with us. See you soon.